we are entering into another topic of the chapter Sources of Business Finance, and in this session we will be talking about a source of business finance which is a borrowed source, or it is a source which is concerned with borrowed fund. It comes under the categorization of borrowed fund, and that is debentures. We have heard this name debentures many a place, and you have to understand this is a borrowed source of fund. Now we will understand in detail what is meant by debenture. Debenture is an instrument for raising long-term fund, and it is long-term debt capital. It's a source which we are using in raising of long-term funds, and that too is a long-term debt capital. For a longer period, we are using a long-term debt source. That means it's a borrowing. Now, what is it? It is an acknowledgement. It is an acknowledgement. It is an acknowledgement. You have to understand this. It's an acknowledgement. And what is that acknowledgement? That company has borrowed a certain amount of certain sum of money, which it promises to repay at a future date. So it is an acknowledgement. Debenture is an acknowledgement whereby company is saying that it's an acknowledgement that company is giving that a company has borrowed a particular amount of money from an individual, from a person, from a firm, or whatever be, and it is promising to repay it at a future date. At a future date it would be repaid. So that acknowledgement of borrowing, which is promised to be repaid at a future date, we call it by the name debenture. And debenture bear a fixed rate of interest. Debenture bear a fixed rate of interest. The benefit the persons are getting when they are purchasing debenture, which is issued by a company, is that they get a fixed rate of interest at a specified interval, say 6 months or 1 year. So they will get a specified or fixed rate of interest. And one more thing, as it is a security and it has to be rated by an agency. It has to be rated by an agency which debenture is good. So in India it is better that it is rated by an agency called CRISIL. CRISIL means Credit Rating and Information Service of India. It is an agency which is rating debentures. So if it is rated by CRISIL, that would be better. And CRISIL is rating it on the basis of profitability, risk servicing, debt servicing capacity, credit worthiness, and perceived risk of lending. That means various factors connected with the company is being assessed, and on that basis CRISIL is rating a debenture, and on the basis of rating it is advisable to purchase the debentures. Okay, so once again, debenture is an instrument for long-term debt capital. It's an acknowledgement of borrowing which is promising to be repaid at a future date. It bears fixed rate of interest. It is rated by CRISIL. It is rated by CRISIL. Nowadays, there is a kind of debenture called zero interest debentures, and there will be no explicit rate of interest. But the face value and the purchase value will be different, or purchase price will be comparatively less from the face value. But on the time of payment it will be paid back in full. So that difference between the face value and purchase price is the benefit for the debenture holders. So zero interest debentures are also nowadays very common. So that is one more thing which you have to keep in mind. Now, what are the merits of debentures? What are the merits of debentures? Debentures, first merit is that the debenture holders will get a fixed income at a lower risk. It is not based on anything else. Company has to make a payment, so there is no much risk for the debenture holders. With lesser risk, they can earn a fixed rate of interest, because every debenture carries a fixed rate of interest. So, one of the major merit is that fixed income at a lesser risk. The debenture holder doesn't have much of risk. Then, second one is no participation in the profit. That is the merit of company. The company need not give participation in the profit. Whatever earnings is there, company need to pay only fixed rate of interest. That means after the payment of debentures, whatever is remaining, it is for the owners, that is equity shareholders. So they don't have to share the profit too much other than what is agreed. Other than what is agreed as a rate of interest for debentures, nothing more is to be shared. So no participation is given in the profits. Third one is suitable when sales and earnings are relatively stable, because fixed rate of interest is to be given. So if we are very sure that we will get enough money to repay this debentures, this can be selected as one of the best source of financing, because we will be able to make a payment. So if sales and earnings are comparatively stable, it is better to go for debenture as a source of financing. Fourth one is does not dilute control of equity shareholders. We have already seen when we learned about equity shares that once a person is purchasing equity shares, he becomes owner of the company, or control in the company will be there for equity shareholders. But in debentures, no ownership is given to debenture holders. They are given only, or they are agreed to be repaid the amount at a future date with an interest. Nothing more than that is given for the debenture holders. So it doesn't dilute the control of equity shareholders. Equity shareholders will not have any control in the company. That is another benefit. And then fifth one is interest payment is tax deductible. That means financing through debentures is less costly compared to preference or equity capital, as the amount paid as interest can be reduced as expense, that is tax deductible. It can be deducted from tax. So in that way the cost is comparatively lesser than preference and equity shares. Financing is less costlier. So that is another merit. Now we are going on to the limitations. Limitation, first and foremost limitation is that it is it is a fixed burden or permanent burden. It's a permanent burden on earnings. That means whatever be the condition, the payment has to be made. We cannot exempt it, as we are seeing in equity shares or preference shares. We cannot exempt it. It has to be paid. The greater risk will be there when fluctuation in earnings is there. It doesn't matter whether earnings is made or not, or less or more. The payment of interest of debentures has to be paid. Earnings has to be used for payment of debentures, irrespective of what is the condition. Second one is repayment is required even during period of financial difficulty, especially for redeemable debentures, which are to be redeemed within a specific period of time. At that time, even if company is going through financial difficulty, company doesn't have much to pay, company has to make a payment. That is compulsory. That's a difficult situation for the company. When the earnings is not there, even during financial difficulty, company has to make a repayment for debentures. That is a major limitation. Another thing is that we have seen debenture is already a borrowed source of fund. So it is equivalent to any other borrowings. That means when we are using debentures, it is reducing the borrowing power. That means along with any other borrowings, debentures is also to be counted. So it reduces the borrowing power. When using of debentures also brings down the borrowing power of the company. We have seen what is the meaning of debentures, what are the merits of debentures, and what are the limitations of debentures.